Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary, and it is Monday morning, July the 7th. Thanks for joining us, everyone. We hope you had a great weekend. 4th of July, we'll hope that was special for you. Had a good weekend, and we're looking forward to today's trade activity. In fact, this entire week will be a normal trading week. We don't have many holidays coming up here. After 4th of July, we get into Labor Day, and that's about it. And of course, that means grilling season's kind of starting to come to an end, and that will affect consumer demand. A lot of the consumer demand has already been stocked up on the burgers and the steaks and that sort of thing. We have one key really grilling holiday left, as traditionally has been thought of, and that is, as I said, the Labor Day holiday. Weather over the weekend, very beautiful conditions across most of the area. A lot of rain across a lot of the Corn Belt. Texas, of course, had historic flooding levels that we don't like to see. A lot of animals and lives lost. And yeah, we're hearing that, being reported through the national media. So some tragic news out of Texas and the flooding. Overnight markets, the U.S. dollar is a little bit firmer in here. Nat gas is lower. Crude oil actually gapped lower overnight and now has turned back to the plus side. We'll talk about why it was lower overnight. Stock market is a little softer here. And look at gold and silver down as well as the stock market. That's surprising that these would be moving in tandem like that. Corn down 12.5, beans off 21.75, and the wheat is 11.75 lower overnight. Now, we gap lower in the grains as well, and have not come back to fill those gaps. Maybe it'll follow what the crude oil did, where it came back and filled its gap. Now trading higher. I don't look for corn and beans to trade higher, but maybe we'll go fill some from gap areas. So let's talk about the markets in here, and I'll be doing RFD TV this morning. Hope you have a chance to check that out at 8:15 Central Time. And as always, there's a list of our offices you can reach out to, and we talk with you about what's on tap and help you out with marketing strategies and trading ideas. Weather maps, let's look at them first of all. Really ideal growing conditions across the Corn Belt, 6-10 day and 8 to 14 day, both calling for above normal temps and precip through July the 16th. Now that's important because it's expected by July the 20th, 50% of the nation's corn crop will have pollinated. And if we get that much crop pollinated through nearly ideal conditions, it's going to be very hard to turn this ship. It looks like we're really trying to break out to the downside. And once we start moving lower, we're going to have a tough time turning that thing around, just from a weather standpoint. Of course, you can get dry in late July and August. That could give us some short-term rallies. But here in the near term, I think things look very good, and the market agrees as we're sharply lower. Plus, Trump's big announcement in Iowa did not contain what the trade had been rumored, and that was a Chinese trade agreement. There was a lot of talk, a lot of rumors about that, a lot of speculation, and we noted these were rumors and not a fact, and the market really sold off when that did not happen. Over the weekend, July the 5th, actually, 8 key members of OPEC Plus has agreed to a larger than expected increase in oil production for August. They're going to raise output by 548,000 barrels per day. That was more than what had been expected, and that is the reason why crude oil gapped lower last night. Now it's starting to come back a little bit in here. Some speculative buying stepping in and lifting that crude oil, but I would suspect rallies are going to be a tough time to be sustained. Coming up this Friday, the 11th, is the next supply and demand report. That'll be out at 11 o'clock Central Time. Newswire is just gathering their information here. So we'll be submitting ours today and tomorrow, and we'll give you the information once it is published by some of these Reuters and Bloomberg. Brazil's second corn harvest, 17% complete, well behind last year's pace and just slightly behind the average of 23. Argentina corn harvest, 71% done. That's very close to the average and last year's numbers. Crop progress conditions report this afternoon expect to show an improvement of 1 to 2% for both corn and soybeans. We could see a big jump in good to excellent rains the next 2 weeks, actually, as the rains that have came and fallen and good growing conditions overall get factored into these values. So we'll see, I think, a little bit of pressure here because of those increased crop ratings and the forecast turning much wetter. In the cattle market last week, we saw cash cattle trade 230 to 235, 2 in the north, 368 to 370 dress. So we're going to call those steady with the prior week, and that was a surprise to the market, which rallied on Friday. In the south, 222 to 225 live, steady to $2 softer. The choice cutouts down only 19 cents, but select increased by 57. So pretty much a steady cutout values, and packer margins with the movement in the cutouts on Friday. They were down. They were at $74 a head on the positive. That is down from previous days, as we did see a big drop in the select on Friday. So we'll look for cash cattle trade to be steady to stronger this week. I think we'll see some strength in this market in here. All right, I'm going to sign off. Hope you have a chance to tune into RFD TV. Give our offices a call. We'll be glad to talk markets with you. This has been Brian Hoops. Good luck, good trading, and as always, we'll talk to you again soon.